If you're interested in the great money-making opportunity that is Forex trading, you need to understand Forex pips. The word pip stands for percentage in point, and so pips are also sometimes called points.
A pip is the measure of rise or fall of a currency pair. You may wonder why this is not measured in dollars and cents. The answer is that the dollar is not always the quote currency and sometimes is not involved in a trade at all. If you were trading the British pound against the euro, for example, it would make no sense to have your profits and losses expressed in US dollars.
A pip is the smallest increment of a quoted currency. Most currencies are usually quoted to 4 decimal places, so 1 pip is 0.0001 units of the quote currency. What this means, in practice, is that if you see EUR/US dollars quoted at 1.4143, and a few minutes later it has moved to 1.4144, it has risen 1 pip.
In the case of currency pairs like EUR/US dollars where the dollar is the quote currency, 1 pip will be $0.0001 or 0.001 of a cent. This does not sound like much, but even in a mini Forex trading account you will probably be trading in lots of $10,000, so that would be $10 on that position size.
If you want to work out your profits for a currency pair where the dollar is the base currency, the one that is given first, you need to divide 0.0001 by the exchange rate. So for example, if the current exchange rate for US dollars/CAD is 1.1182, 1 pip will be 0.0001 Canadian dollars. To convert to US dollars you divide by 1.1182, giving 1 pip a value of 0.000894. This equates to US $8.94 on a $10,000 lot.
When the Japanese yen is the quote currency, the position is a little different. There can be around 100 yen to the dollar, so the quote is normally only given to 2 decimal places. For example, you might see US dollars/JPY quoted at 93.72. In this case, 1 pip is JPY 001. Dividing by the exchange rate gives us the value in US dollars of 0.000167 per pip, or $10.67 on a $10,000 lot. So having the quote to only 2 decimal places gives yen pairs a pip value that stays in the same ballpark as the other currency pairs. You will usually find that you do not need to do all of these calculations yourself, because most brokers will provide a tool to convert your pips into profit and loss figures for the dollar, or whatever currency your funds are held in. However, sometimes you may want to work out a trade on paper, and in that case you will find you need to know how to work it out for yourself. You can set up the formula in a spreadsheet so you do not have to pull out your calculator every time you want to know the value of Forex pips.